Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another video of Charts in Action, where today we're going to be analyzing the price of gold. Now, gold is on what seems to be an unstoppable trend. We've been increasing in value for quite a few weeks now, and also we must take into consideration that gold is one of the best performing assets of 2025. Now, today, what we're going to be looking at is the $4,000 price target, which now is official and has been announced by Goldman Sachs, and it has also been announced by Deutsche Bank as well. So we're going to be looking at that $4,000 price target, because if we're looking at 6 months ago, or if we're looking at, for example, a year ago, nobody would believe that that is a possibility in 2025, or at least in the first 2 quarters of 2026. However, now that it has been made official by 2 main global banks, it is something, of course, we must take into consideration. So we're going to be looking at that target, and we're also going to be looking at if there is any indication that the price is overbought as well. So why is the price of gold increasing in value? I mean, we'll start off with a daily time frame. If we're looking at a daily time frame here, we can see we were in that prolonged range-bound trading conditions between the spring all the way up to the summer. Now, the reason we saw that is because of tariffs. We already saw a very strong increase in the price of gold in the first 2 quarters of 2025. And because of that, traders and investors were waiting for renewed price drivers to really give an indication that, yes, we should be further exposing our portfolios to gold and the price movement of gold. Now, that, of course, happened when we started to get indications of interest rate cut by the Federal Reserve. And that is one of the main drivers of the price of gold. The main driver, like I said, is the fact that now we've had an interest rate cut, and we're expecting 2 further interest rate cuts in October and also in December. If we're looking at the possibility of an interest rate cut in October, there's a 90% chance of an interest rate cut. If we're looking at December, there's a 65% possibility of an interest rate cut. So the fact that we are expecting 2 interest rate cuts in the remaining 2 meetings by the Federal Open Market Committee in 2025. And in 2026, we, of course, everybody knows that we are going to get a new chairman of the Federal Reserve, which will be announced by the Treasury and, of course, the President of the United States of America. And everybody knows it is going to be somebody that has a dovish outlook and who would give a dovish forward guidance for the Federal Reserve's interest rates. So that's a very big price driver. Of course, because we're getting interest rate cuts as well, we're definitely getting weaker price movement on the US dollar, which again is correlated with gold and driving the price of gold higher. So the fact that we're getting interest rate cuts and we're also getting a weaker dollar, there is a lot of risk which is associated with the economy because of tariffs, because of geopolitical tensions, especially over the past 2 weeks, where the tone of the US has changed towards Russia. And we also have had some escalation on the Russian side, especially on the Eastern European boundaries as well. Geopolitical tensions have significantly increased, the employment sector has significantly weakened, and that brings about a lot of risk. Of course, the safe haven assets of the world is mainly gold. Of course, we have to take into consideration the US dollar, the Japanese yen, and bond yields. But if we're looking at the yen, the US dollar, and bond yields, they are all underachieving. So investors are really driving and increasing demand in the price of gold. And this is why we're seeing this upward price movement. So we can't necessarily, ladies and gentlemen, say that the price of gold is overbought based on fundamental factors. We may say that in the short period of time, it's understandable if the price retraces, because of course it's traded at such a high price, there is a high possibility of profit taking. So retracement is possible, but we don't necessarily have a 100% indication from fundamental factors which will point us towards gold being overbought. In order for gold to be overbought, we have to suddenly have a change in tone by the Federal Reserve and no longer look at the possibility of frequent interest rate cuts. So, for example, if they say to us, we'll cut in October, but then we'll pause for the next 3-4 months, then of course we have an indication there the price of gold is incorrectly priced and trading above its intrinsic value. If we're looking at indicators, especially the RSI, which is one of the key indicators of whether gold is overbought, we're trading currently at 69, so we're not at a level, ladies and gentlemen, indicating that the price is overbought. The only thing which is a concern is that if we measure the impulse waves that we have seen over the past few weeks, we're currently at the same level here. So if we look at the price of gold and we measure, for example, from here all the way from the low to the high on the 2-hour time frame, we've got just above 4% of an increase. If we do the same here, ladies and gentlemen, again, we've got just above 4%. And if I do that on the rest of the impulse waves, on average, the impulse wave is just above 4%. So we are at a level where the price tends to retrace. So to answer the question, if the price is overbought, we don't have an indication yet that the price is trading at an overbought price. But we do have some indications, especially from price action and measuring the average impulse wave that we have been seeing, that the price may see a retracement. Now, if we are going to see a retracement, if we're looking at price action, the main retracement level and target will be this level here. And that is because a lot of the time when we see retracements, if we see the resistant level, which is at this blue line, being flipped onto the support level. And I can give you an example as well. If we look at this resistant level here, you can see it was broken through, a retracement formed, and it retraced back to that level. So this is what is known as the resistance being flipped onto the support. So if we are going to see a retracement, potentially that is an area where a lot of traders will aim for. If we're going to, though, look at technical analysis in terms of moving averages, we're getting a slightly lower indication to this area of the market here. So between those two areas, based on technical analysis, we have indications that if we are going to see a retracement, at first, in terms of the first target, it's somewhere between these two regions here. Now, the question a lot of individuals will be saying is, if we are going to see downward price movement, where will we get that indication of downward price movement? Now, if we look at a 3-minute time frame, a very key level will be the 200 bar simple moving average, which is where it gives us an indication of the bias of the price condition. You can see here we're trading above the 200 bar moving average. Because of that, we have an indication of upward price movement. And so far, we can see all of the price movement has been upwards, other than the retracement that we have seen here. So the indication where it changes from bullish to bearish is as soon as the price drops below this level here. If the price drops below that level there, then we have an indication, for example, on the 2-hour, on the 1-hour, that we may see a retracement and price movement downwards. But of course, in regards to that, we have to keep monitoring, for example, the US dollar index and other metals as well. For example, the US dollar index at the moment is currently trading lower. It's the worst performing currency of the day. Best performing is actually the Japanese yen. If it continues to be the worst performing, continues to decline, then we still have an indication that even if gold declines, it could rebound. So we don't want conflicting signals there. And if we look at the global metals market, all metals today are trading higher. Palladium, platinum, silver, gold, of course, copper is trading slightly higher as well. So all metals are trading higher. So if we are going to see a change in the bias, of course, we want to see the US dollar increase in value, and we want to see other metals also see a decline, just to validate the signal, of course. So that is if we're going to see a bias towards the downside. But if we're going to see this very simply be a retracement, and it being an area where traders take advantage of the lower price to speculate upward price movement, then we of course need to look at where buy signals will be renewed. Now, if we're going to see buy signals renewed, ladies and gentlemen, a lot of traders will look at as soon as 61% of the retracement has been regained. Now, a lot of people say, why 61%? Well, if we look at retracements, there's different theories. Some theories is that a retracement is up to 50%. Others believe is up to 60%. Now, either or, we're placing it at 61% and above. So it's basically at the level which says enough momentum has been regained in favor of the trend to indicate that the retracement is no longer active. So this is 61% of the retracement being regained here, ladies and gentlemen. So it's at this blue line where we got potentially buy signals buy signals materializing again. A lot of traders will also look at the breakout level. The breakout level is here. The difficulty with the breakout level, though, is that it gives you a more delayed response, which makes it a slightly more risky area to trade. Of course, traders can look at methods, though, such as scaling in or pyramiding in order to open multiple trades if they wish to, for example, trade at this blue line and open secondary and third trades at this blue line and thereafter. So, ladies and gentlemen, we've looked at where sell signals will materialize and where potential targets are for gold declining in the medium term. We've looked at for the short term where buy signals will again materialize as well. Now, if we're going to look at buy signals in regards to gold, because we're trading at all-time highs, we cannot take into consideration other resistance levels that we have seen in the past. Of course, in the medium to longer term, so throughout the rest of 2025 and the first quarter of 2026, a lot of banks now are placing a target at $4,000, but of course for short-term traders we need a closer target as well. Just to summarize very quickly, the reason why, ladies and gentlemen, we're seeing such strong upward price movement in the price of gold is because of expectations of interest rate cuts, expectations of a dovish Federal Reserve chairman in 2026 being appointed, a weaker US dollar, weak bond yields, weak bonds as well, and generally speaking, the poor performance of safe haven assets other than gold is driving the price of gold significantly higher. The last thing I also will mention is, of course, geopolitical escalations that we have seen over the past few weeks. So that's the end of today's session. Hopefully it was educational. Very interesting volatility that we are seeing with gold, but that's the end of today's video, and hopefully we'll see you again on our next video. Feel free, of course, to check out our live webinars and new trading courses which are available on our website. In the meantime, though, trade safe, trade responsibly, and goodbye.